Remember when tech stocks were invincible? Yeah, good times. Lately, it's been a different story. Recession fears have gripped the market and tech stocks have taken a tumble. It's enough to make even the most seasoned investor sweat a little. But hold on, because UBS, the financial giant, has some advice for navigating these choppy waters. Volatility might sound scary, but UBS says don't panic. They see this market dip as a chance to make some strategic moves. Think of it like a Black Friday sale for your investment portfolio. Instead of rushing for discounted TVs, you're scooping up undervalued tech stocks. The key is to be smart and strategic. One area where UBS is particularly bullish is artificial intelligence, or AI. This technology is not just a buzzword or a passing trend, it represents a fundamental shift in how businesses operate and how we live our daily lives. This isn't just some futuristic sci-fi concept, it's a reality that's unfolding right before our eyes. From healthcare to finance, AI is revolutionizing various sectors. It's already impacting our lives in ways we might not even realize. Think about the smart assistants in our homes, the recommendation algorithms on our favorite streaming services, and even the advanced security systems that keep us safe. UBS believes AI is here to stay and will be a major driver of growth in the coming years. The potential for AI to transform industries and create new opportunities is immense. But how much AI exposure should you have in your portfolio? This is a critical question for investors looking to capitalize on this technological wave. That's where things get tricky. The AI sector is still evolving, and with that comes a certain level of uncertainty and risk. UBS's Mark Haefele, a man who probably has a very expensive watch, suggests a balanced approach. He emphasizes the importance of not putting all your eggs in one basket. If you're low on AI, consider dipping your toes in the water with structured strategies to manage risk. This could involve investing in a mix of established tech companies and emerging AI startups. Already swimming in AI stocks? You might want to explore capital preservation tactics to protect your gains. Diversification is key here, ensuring that your portfolio is not overly reliant on any single sector. You might want to explore capital preservation tactics to protect your gains. This could involve reallocating some of your investments into more stable, less volatile assets. By doing so, you can safeguard your portfolio against potential downturns in the AI market while still benefiting from its growth potential. In conclusion, AI is a powerful force that's reshaping our world. Whether you're just starting to invest in AI or already have significant exposure, it's crucial to approach this sector with a well-thought-out strategy. By balancing risk and reward, you can position yourself to take advantage of the incredible opportunities that AI presents. The future is bright for AI, and with the right portfolio strategy, you can be part of this exciting journey. Stay informed, stay balanced, and most importantly, stay invested in the future. Let's get down to specifics. The semiconductor industry is a complex and dynamic field, constantly evolving with technological advancements and market demands. Understanding its intricacies can be quite challenging, but it's essential for making informed investment decisions. One area within tech that's getting a lot of attention is semiconductors. These tiny yet powerful components are the backbone of modern electronics, playing a crucial role in the functionality of countless devices. These tiny chips are the brains behind our smartphones, computers, and even our cars. Without them, the digital world as we know it would come to a standstill. They enable everything from basic computing tasks to advanced artificial intelligence applications. UBS sees a lot of potential in this sector, but they also caution against putting all your eggs in one basket. Diversification is key to managing risk and maximizing returns. By spreading investments across various segments of the semiconductor industry, investors can better navigate market fluctuations. They recommend focusing on what they call AI logic chips, which sound very important, and quality foundry stocks. AI logic chips are essential for the development of artificial intelligence technologies, driving innovation and efficiency in numerous industries. Think of foundries as the factories that churn out these chips. These specialized manufacturing plants are critical to the production process, ensuring that chips meet the high standards required for performance and reliability. However, UBS isn't so hot on memory chip stocks right now, citing volatility and regulatory risks. Memory chips, while essential for data storage, are subject to significant price fluctuations and regulatory challenges that can impact their profitability. Citing volatility and regulatory risks, UBS advises caution. The semiconductor market can be unpredictable, with rapid changes in supply and demand affecting prices and availability. Regulatory issues, such as trade restrictions and compliance requirements, add another layer of complexity. And if you're thinking about investing in chip manufacturing equipment makers, be aware that they're heavily reliant on China. These companies depend on Chinese markets for both production and sales, making them vulnerable to geopolitical tensions. Be aware that they're heavily reliant on China, which could be a risk given the ongoing trade tensions. The trade war between the US and China has created uncertainty, affecting supply chains and market stability, which could be a risk given the ongoing trade tensions. Investors need to stay informed about international relations and their potential impact on the semiconductor industry. By understanding these dynamics, they can make more strategic investment choices. Big tech's big potential focus on quality and growth. Now, let's talk about the big boys, large cap tech companies. We're talking about the likes of Apple, Microsoft, and Amazon. These giants might have taken a hit recently, but UBS believes they still have a lot of growth potential, especially when it comes to AI. UBS points to Microsoft and Meta, formerly Facebook, because apparently that name was too boring, as prime examples of companies that are successfully monetizing AI. Microsoft's cloud business is booming thanks in part to its AI capabilities, while Meta is investing heavily in AI to improve its advertising and e-commerce platforms. Smartphone surge riding the replacement cycle wave. Remember when everyone was freaking out about the smartphone market slowing down? It seemed like every headline was predicting the end of the smartphone era, with sales plummeting and innovation hitting a wall. Analysts were painting a grim picture, and consumers were holding onto their devices longer than ever before. Well, UBS thinks the doom and gloom was overblown. According to their latest research, the market is poised for a significant rebound. They believe that the fears of a permanent slowdown were exaggerated and that the industry is about to experience a resurgence. They're predicting a surge in smartphone sales thanks to the replacement cycle. As technology continues to advance, older models become obsolete faster, pushing consumers to upgrade more frequently. This cycle is expected to drive a wave of new purchases, revitalizing the market. People are finally ditching their old, cracked iPhones for the latest and greatest models. The allure of new features, better performance, and improved cameras is too strong to resist. Consumers are eager to get their hands on the newest technology, leading to a spike in sales. UBS is particularly bullish on Apple, which isn't exactly a hot take. Apple has consistently been a leader in the smartphone market, and their loyal customer base ensures strong demand for their products. The anticipation for the latest iPhone models is always high, and this year is no different. They point to strong demand for the new iPhone, shocker, and believe that Apple's innovative features and sleek design will continue to attract consumers. The excitement surrounding each new release creates a buzz that drives sales and keeps Apple at the forefront of the industry, and believe that Apple's supply chain partners stand to benefit as well. Companies that provide components for Apple's devices are likely to see increased orders and revenue as a result of the surge in demand. This positive outlook extends beyond Apple to its entire ecosystem of suppliers. However, they caution against investing in lower quality hardware companies that might struggle to compete in this crowded market. Not all smartphone manufacturers will benefit equally from the replacement cycle. Companies with inferior products may find it difficult to attract consumers who are looking for the best value and performance. So what's the takeaway from all this? UBS has a few key recommendations for tech investors. Risk assessment is key. Figure out how much risk you're comfortable with before you even think about buying a single stock. Diversification is your friend. Don't put all your eggs in one basket. Spread your investments across different tech subsectors to reduce risk. Stay informed. The tech world moves fast. Keep up with the latest trends, technological advancements, and geopolitical developments that could impact your investments. Despite the recent market turmoil, UBS remains optimistic about the long-term potential of artificial intelligence. They believe that companies at the forefront of AI innovation are well positioned for future growth. In other words, if you're thinking about investing in AI, don't let a little market dip scare you away. Navigating the tech landscape can be daunting, even for experienced investors. That's where UBS comes in. They have a team of experts who are constantly analyzing the market and providing guidance to investors. Think of them as your Sherpas for the tech investing world. The tech sector is constantly evolving, with new innovations and opportunities emerging all the time. It's an exciting space to be an investor, but it can also be intimidating. UBS believes that by staying informed, making smart investment decisions, and taking a long-term perspective, investors can capitalize on the tremendous growth potential of the tech sector. Ready to take your tech investing to the next level? UBS has a wealth of resources available to help you make informed decisions. From market research reports to investment strategy guides, they've got you covered. So, there you have it. UBS's take on navigating the exciting, volatile, and potentially very profitable world of tech investing. Just remember, this isn't financial advice, and I'm not qualified to give it. But hopefully this has given you a better understanding of what UBS is thinking and how you can potentially profit from their insights. Now, if you'll excuse me, I have some discounted tech stocks to buy.